Hello out there in the world of crypto and investments. I'm going to kind of encompass more and be broader in investments because I think it's important that we keep our portfolio balanced, especially as early on as we are with crypto. I'm very pro-crypto, but today I want to talk a little bit about basically a little bit on how we raise money outside of the banking, typical financial institutions if we want to do a project like a real estate project. I'm not going to focus a whole lot on that, though we'll touch a little bit. More so I want to talk about how we keep the confidence of the people, the investors that invest with us after we raise that money. I think that's the hardest part, is maintain that confidence and not having a division of people trying to pull out early. So I want to talk a little bit about that today. I think it's important, so please pay attention because there's opportunities coming up now when the economy is going to, collapse or continue on this downward stream in this bear market. There's opportunities there. But finance is going to be tougher to get. So let's talk a little bit about some options, and then let's talk about how to keep those options. DeFi, IoT. To begin with, I just want to say this. When economies boom and bust, it's really easy to anticipate what kind of returns you can get on your investments. And, it's easy to get money, too, because people can go and borrow money for low interest rates, like we just saw 2 years of, right? And even a little bit more. But when it's not so boom and bust, it's not so easy and not so predictable. And that's when it gets tough. So where do we get money at? Well, first of all, you have your traditional financial institutions, right? And if you want to get involved with real estate, you can go to your traditional financial institutions and you can actually, if you qualify, get money to buy in your real estate, or maybe borrow against your real estate you bought, if it's a fixer-upper, to fix it up, right? And force that value of that piece of real estate. Now, that's one way to financial institutions. However, with the interest rates rising, and we're pushing 6% now, right? We're getting up there, 5.5% to 6%, over 5%, and we were just at 2% a few months back. So with that being the case, it gets more expensive to use that money. Now, if it's short term, 90 days, your turnover and your profit margin can be good, that's fine. But we're also talking about a real estate market, for example, or a market in general that's actually on a downward swing, a serious downward swing, a bearish market by all intents and purposes, and possibly even a major economic crash. Now, there are motives and there's force behind this to push us into a crash. So we need to be careful on that. That's one thing. And I've got other videos to talk about that. Today I want to talk more specifically on if we're going to invest in crypto or if we're going to invest in traditional assets, gold, silver, real estate, being your more traditional stock market. I'm going to just say this. So if I have those assets, I can put those assets up for collateral, excuse me, in a typical financial institution. We're barbecuing here and smoke just came over this way. A typical financial institution, a bank, etc., a credit bureau, whatever, to borrow money out from a project, to take money from a project. Or I can use the actual asset, or I can qualify with my credit score, right? As long as I have the money and income coming in to be able to do that. So not everybody can do that. Now, if you have assets, you can also form your own guarantee. You can go out and say, okay, I have these assets. I'm going to put up as collateral if my friends and family want to join in with me. Now, you got to be careful breaching SEC laws, because if you go out and say, okay, I've got this project and I've got this collateral, and open it up like on YouTube. So if you guys want to invest with me, let me know and we'll get together and invest. Well, then you could be walking a thin line with the SEC, which is ridiculous, but there's that much control. However, if you launch your project on blockchain right now, until the SEC actually define this, you could still be walking a thin line with SEC. But for the most part, you're protected because there is no real transparent laws against blockchain. And I want to actually launch a project through blockchain to raise capital for a project that is a green project that I think will be good. And we wanted to do this in other ways before. We had to raise the capital, and I thought of ways we could raise it. So you can raise it. Let's take an example. Let's just do an example. If you want to raise capital on blockchain, for example, it doesn't take much to develop your own blockchain. In fact, there's a lot of videos out there that teach you how to do that. You just follow these steps and develop this blockchain. You need to write up a white paper. A white paper is basically an overall idea of what you're going to do and how you're going to actually pay out at the end. So it's a basic game plan. It's an overview of your business plan, right? So that's your white paper in summary. I mean, people could say more technical things about it. And that's your white paper. And you can go out and ask friends and family. On blockchain, you can actually go out and promote it. You can get on YouTube and promote it if you want to. Be careful, because you got to be careful how you promote your token, though, right? You want to keep it a token, not a coin. And so if you've got a token that's basically a utility token, that token is going to be used to actually just give more support to the project. You're not promising to pay out any money on that token, then the SEC right now will not hold that in regard as under their rulings. However, if you go out and say, okay, for so many tokens, they're redeemable for so much money, now you're promising something different, right? So it has to be that when they take and buy the token, or even the coin, if you want to go that measure, if they want to buy that cryptocurrency that you're offering, that they're willing to accept that risk. So you can't really promise a return. You can only explain what you expect to happen and how it's going to happen, okay? With the ability for the community to vote on that if they want to change that decision. So through blockchain is a good way to actually create a way to raise funds. Now, don't abuse that, because there's a lot of people out there that abuse it. A prime example that you know that we are really kind of upset with is Planet Watch. They've really taken advantage of blockchain, taken advantage of the community, and they're really mistreating them. And they continue to do so when they could actually just own up and be responsible for the money they cause people to spend. Now, I want to get to that next level. So those are ways you can raise money. Family and friends. Got an idea? Sell the idea. But you got to write it down. Okay? And you got to write something down, like a white paper. I've heard people say, we just do it on a napkin. That's where you're already in confidence. Like Robert Kiyosaki, who was great, by the way, because great advice. And I didn't always like Robert Kiyosaki. When I was a speaker, and I was a little fish in the big pond, but I was a speaker, I would go and do these different circuits. And Robert Kiyosaki was there speaking on a different platform than I was, but I was speaking and basically and how to gain wealth in real estate. Donald Trump was there. You know, Al Gore even came in on one. I don't know what he was talking about, basically all of his green project and so forth. But we were basically there trying to help people understand where and how they could invest. Now, and offering opportunities for them. So you can raise money through a good idea, but research that idea. Make sure you do your homework on it. Look at what also could be your foe, what could cause the collapse, right? And then just a summary to end this video. I think these are like two areas, and the third area would be, those are areas you can raise money. But I think that what you need to understand is something you need to do with your investors, if you will, your partners more so. You want to call them partners. Be careful of the word investors, because you could actually run into SEC problems there. I'm trying to get into the sun here so I don't get shouted out. Okay, so to summarize this, one thing you need to do is be very transparent and very honest. When you obtain that money, if you run into obstacles, hold monthly meetings or bi-weekly meetings. They call them AMAs in blockchain. Hold those meetings, explain what the progress is, explain what any holdups are, and explain how you propose to resolve those holdups. If you need somebody to help vote, there's a couple of choices, a couple ways you can go. Then offer that vote out to the community or your actual partners, if you will, investors in this, and give them the opportunity to give feedback and participate. When you do that, you're going to have less disconfidence. You're going to have less suspicion, less rumors. And that is going to only give a credit to you and your character. And in the future, that's going to bring those people back on board with you. Even if you have obstacles where you get delayed, you can say, okay, look, it got delayed. The market changed or this reason. Don't make excuses. Give serious reasons and show those reasons. Back your words. Okay? Show them. People are understandable. And also qualify the people you want to bring in with you. If there's people there that took a loan out for their investment, you don't want that, because they're going to be pressuring you because they got to pay that loan back or they got to pay that interest on that loan. You want actual capital that people have at their disposal to be able to invest with you in a project, being more of a partnership, I recommend, than being investors. And be careful with that. because of SEC ruling. If the family and friends, you can bring in investors. That's fine. But I would bring in more partnership for maybe an LLC or something. Bring in partnerships. You have 51% control of it, and then you can split that out with shares, and everybody has a value of those shares in the project. Okay? And then what you could do with each project, you could terminate the LLC, give everybody back their money, share the profits as you had allotted for each share, etc. You can stipulate that. And that gives people a sense of security. The transparency, I think, is the most important part. Now, I've learned from both. I've learned from always trying to be transparent, but also trying to kind of like maybe think I could pull something off to fix the problem instead of having to present the problem, because I knew I had some people on board with us. I had investors at this point. I knew I had some people on board with us that were really edgy and just looking for the first excuse to try to like bail out and cause maybe a run on our company. And so I had to do that very delicately. So it's very important you choose first who you get in bed with. In so many words, you choose first who you actually bring into your company. Just don't go after any money. But it's not that difficult to get money if you have a good idea and you got a good sound project. People are looking for that, especially right now. Maybe there's not a lot of liquid money out there, but people don't know where to put their money. So this is a great opportunity. And I think real estate in certain areas is a good opportunity. But be careful. Do your homework first. These are just areas I want to offer of where you can raise money and how to treat those people whom you raise money with so you can continue going forward. And make sure you always pay them out when you say you're going to do it and how you say you're going to do it. If there's any change to it, let them decide on that change. Offer them options and let them decide. Work with them. Be transparent. That's very, very important to going forward in an economy where there's going to be a lot of doubt and a lot of people losing money and a lot of blockchain companies and cryptocurrencies going under. So don't be one of them. Be wise. If you like this information, do me a favor before you even jump in your first LLC, and we're going to get into that later. I'll bring more how to do all this stuff, where to put your money, also when you make that money to get offshore so you can reduce illegally your taxation and secure your property and so forth, secure what you have in case of lawsuits. Or I got this line across me. I look like I'm some sort of an ancient native from the jungle. Yeah. Anyway. And I have a lot of good native friends and partners with me, so I'm not bagging on them. I'm just saying that line there for what I can see. Yeah, subscribe to the channel. Please give us a thumbs up, and we'll see you in the next video. We hope you enjoyed this segment of our video with DeFi IoT. Remember, we're not professional advisors. We do this as a business, as a hobby, and we study, we experiment, and we want to share it with you. If you can get some benefit from this, great. What we do is we go out, we purchase with our own money, and we experiment to see what true results are. We want you to be able to share in our experiences so you don't have to lose like we have. If you can win where we've won, fantastic. Remember to do your own research and your own homework. It's very important before you make any decisions. We will see you in our next video.